Hello traders, welcome back and welcome to the next week's watchlist video. This week went as expected. In my last video, I covered why we might get a short bull rally, and indeed that's what happened. We had a Fed Chair Jerome Powell spoke twice this week to shed some light on the solution to control the runaway inflation. And honestly, I was expecting the market to tank, but that didn't happen. And we got a nice bounce back. Now the main question here is, will this rally continue? And I think yes, it will continue for the next few days before getting rejected from the key support or resistance level. So without any further ado, let's get started with this week's watch list. Starting with Nasdaq. Nasdaq pumped nicely after bouncing from 11,000 level, and now it's moving close to that 0.618 retracement from its recent low. If this rally continues, then we can see 12,800 within a few days, but that's about it. Any further move should be monitored carefully. Now moving on to S&P 500. Similar to Nasdaq, it has the big push towards the closing. That means at the end of the Friday. And I can see that it can go close to 3,900 to 4,000 level very quickly if this bull rally continues. Now, that's totally depends on overall market sentiment. But I think similar to Nasdaq, S&P 500 might rally for next few days. Now, in case of Nasdaq and S&P 500, remember that we are still in the bear market, and this is not a normal bull rally that we saw in 2020 and 2021. Now, please pay close attention to both Nasdaq and S&P 500. With this bounce, they're also forming a bear flag, and you should be careful here, especially if you are swinging any calls. Moving on to VIX. VIX dropped massively from its recent high of 35 down to 27. Now we might see a retest of 24 level before rebounding, because VIX is inversely correlated with the stock market. VIX measures volatility. If the volatility goes down, stocks goes up. If volatility goes up, stocks goes down. XLE. The energy sector took quite a beating from its recent high, and I think it's in oversold territory and looking for a rebound. I'm not putting optimism here, but on the rebound, it can quickly retest 76 level, where the previous support turns into resistance. So we need to watch that level. Also, if we get a drop in a tech sector and the stocks, then energy sector will pump. Similar to VIX, energy sector has that inverse correlation with the stocks, specifically tech sector. So just keep an eye on both of those sectors time by time. Also pay close attention to major indicators such as stochastic and RSI indicator that will give you more in-depth picture about any sector. The next one is Russell. Russell seems like lagging behind Nasdaq and S&P 500 as its stochastic turned bullish after Nasdaq and S&P 500 had their strong bull runs or rebound. Based on the technical analysis, I'm confident that it will fill the gap between 175 to 177 with a possible retest of 180. If the market still remains positive by that time, then maybe a retest of 183 could be possible. But at the same time, be cautious because we are still in the bear market. So that's it for the futures and the sectors. Now let's take a look at few stocks. Starting with Amazon. After split, Amazon nearly plunges into double digit but got a nice rebound from its low of 101. On the basis of fib retracement, it can push towards 118 to 123 at the max. If the market stays strong, then we can get the validation of its current double digit bottom formation. Otherwise, it can come crashing down to retest 115 to 100 level. Next one is charge point. This one caught my eye because of its well defined downtrend resistance and its current price. If it breaks the resistance, then it can move to 20, otherwise it will push towards 16 followed by a big flush. This could be more interesting play towards the downside. CHWY. CHWY had a parabolic move, and the stock that has been beaten down since the beginning of interest rate hike makes it more interesting. Based on the fib retracement, it may push towards 41, but it needs market support for that type of move. Otherwise, it will come tumbling down back to 30 level. CrowdStrike. CrowdStrike has a picture perfect bear flag formation and cannot be ignored. Now it might push towards 200 with the current market trend, but it's looking more and more bearish as it moves upward. Now I'm loading up my options, put options here slowly. I'm taking my position with the CrowdStrike, but please do your DD and make your own decisions. This is not a financial advice, but it looks very interesting to play towards the downside, so why not to give it a shot. Dollar General is also very looking cheeky. I mentioned this in my last video and I wasn't sure about its direction at that point, but now it's clear that it was bullish. Now I'm not sure how long this bull run can last, but it looks prime for a short play where it can easily retest to 39 very quickly and very easily. Moving on to MasterCard. It's looking very good for a gap fill between 330 to 334, but other than that, it is looking pretty bullish based on stochastic and RSI. Next one is MongoDB. Another big bear flag formation similar to CrowdStrike, and check for retest of 320 to 330 or at the max 350. Beyond that, everything will depend on the market condition. If the market turns bearish again, then 245 is not that far off for MongoDB. NEO. I usually don't cover Chinese stocks because of their government policy, but NEO has a nice setup to play towards the downside. It's in the cup formation, and that edge of that cup could be either at 24 or 26. But in either case, if you have enough patience, then you can catch that downward move towards the 20. You can build your position slowly as it continues move higher and higher, because again, that's a parabolic move, and in this market, these type of moves are not sustainable for a longer period of time. Shopify is heading towards 10 to 1 split. It's where it's coming, I guess, on June 29th. And the 400 target at this point, at this current price point, is not that far off. If you are in puts or calls, then I would suggest close that position before the split. Otherwise, it might be possible that you might get assigned, and you don't want to be in that situation. Trust me, I've been there, and it's not a good situation unless you have enough cash laying around and don't mind to buy those stocks. But it would be interesting, like after split, like where it wants to go, because at the current price point, it probably falls under $50 or under $40 level. If there is more downside, then where it can go from that level, it's really interesting to watch. Snowflake, similar to Amazon, almost touched to $100 $100 mark but moved parabolic from 114, and it's clearly heading towards 165, which is a 0.382 retracement from its recent move. At 165, its previous support will act as a resistance and could be the reason of its rejection, bringing it down towards 140. Next one is Tesla. With the latest news about Tesla losing billions of dollars on their new factories, it's quite concerning, and we might see that effect in their upcoming earning reports. At this moment, Tesla is holding up nicely against its channel resistance, and it may push towards 800, but that will be the ultimate push. And if market condition turns south, then Tesla can quickly come back down to 700. So that's it for this video, guys. I hope you like this video, and if you like it, please show that by hitting the thumbs up button and subscribing to the channel. Your support means a lot to me. Once again, thanks for watching, and see you again in next video. Bye.